Today we will talk about XRP and the XLS-30d Automated Market Maker Amendment that is proposed to be included on the XRPL. So as of today, which is January 30th of 2024, we are just 2 votes away from the 28 vote passing threshold that would have to be upheld for a total of 2 weeks. And that changed a lot even from a few hours ago when we picked up a couple of more yes votes. So an interesting note is that it has been found that the XRPL's AMM outperforms ETH options. There are no other AMMs built directly at the protocol of a blockchain. So there is more on that from Matt C. and from Mr. Man XRP if you are interested in that. So I only included this, which was from the 25th, because it did call out that there will be a 2.0.1 update of the XRPL that would correct the issues that some of the people in the community had and were not passing an AMM amendment before. And that's a little bit more. So on the 29th, the bug fix for version of the XRPL was released, and that would take care of 10 issues that came up in the testing. And I have talked about the AMM proposal in the past probably a couple of times now, and I have begun to learn more and more on it as time goes on. Now, I am not a tech guy, I am not a coder, and I'm not even a finance guy, in all honesty. I just think that this technical topic is pretty interesting because it lines up with the fact that XRP can and will be able to perform a lot of other high value processes that reflect my hypothesis that XRP can and possibly will be implemented by wholesale and financial institutions. So here is a post from Mickey B. Fresh, who puts out a lot of pretty technical information, and in particularly on XRP. So a concern of the AMM is that there is a risk of impermanent loss. And essentially what that means is that if you put XRP and or another asset into an LP on the AMM, then depending on what the supply and demand is of that pair, then when you would withdraw the asset that you put in, it might not be worth as much. And I have heard opposing takes on that, where it does not have a risk of impermanent loss and it does. And I haven't talked about it that much because I haven't been that sure. But here is a good perspective on this. So impermanent loss is no longer a benchmark we should use because it's flawed by design and totally misses the inherent flaw in AMMs. The AMM pricing is always, I can't say STs, compared to external markets, and is too low or too high, allowing arbitrageurs to extract value from a LP. On the XRPL AMM with continuous auction, that addresses this impermanent loss problem and turns the volatility, which usually results in more extraction of value into additional profits for LPs, and the band to arbitrage is not big, with 4 accounts that prices synchronize much more rapidly and reduces slippage as well. A big part of the hype against, or the lack of hype, is because a lot of the XRPL community is a little bit immature, in the sense that the community has a very large percentage of people that think that XRP will go to some very high value pretty much overnight. And I think overnight on a long-term scale might be applicable, but I don't think that it'll just happen like actually overnight. So it will open the doors for numerous dApps to launch, and is only the fundamental heart of the XRPL liquidity provisioning, and provides XRP with the one thing that it lacks. So that has a lot of information in there, and I'll open this up a little bit to just talk about a couple of these points. But there is a video as well from David Schwartz that I want to actually talk about. But here, this is talking about DeFi, and I believe it's from McKinsey. I'm not sure, but this could become another source of permanent demand for crypto assets through the concept of the total value of tokens that is locked, or TVL, at any point in time.
Something near and dear to my heart, the automated market maker specification. I almost said automated money maker, which actually is kind of, it's actually pretty apropos, right? AMMs will harvest volatility for yield. Volatility will drive market makers, which the AMM makes the spread, right? It takes a movement in price to really drive that volume. And of course, volatility increases arbitrage or profits because the AMM gets more out of balance more, and the AMM gets a cut of those profits through the auction mechanism.
So this could really turn the volatility of a digital asset from a downside to an upside. Super excited about it.
Automated market makers on the XRP ledger could be a game changer, uniquely positioning it to leapfrog other DEXs. Liquidity providers will get better returns through the inherent execution advantages of the XRP ledger that I just mentioned, and a sort of secret sauce that will allow liquidity providers to get more of the profits normally lost to arbitrage, and it will be bolstered by incentive programs. Traders will get better pricing and better order execution due to integration with existing order books. They won't have to change anything they do. You'll be able to execute the same payment and trading transactions on the XRP ledger. You'll get more liquidity and better payment and trade execution.
And it will be bolstered by incentive programs.
So the fact that the XRP ledger fees are lower is going to mean more of that money that would go to arbitragers stays with the people who are staking the pool. And that's what you want, because if people don't stake the pool, there's no liquidity. You want the stakers to reap the rewards of their staking so that there will be these deep pools of liquidity. And then with the mechanism that we're working on that will allow the pool to recapture much of the profits that the arbitrage makes, almost as if the pool were arbitraging against itself, we're hopeful that that will incentivize very deep pools of liquidity on the XRP ledger that will make movement between tokens very efficient. So that could be, I think that could be a game changer.
And about the only reason to oppose the AMM amendment is if you don't want XRPL to grow. So he probably explained that a lot more concisely than I could by just picking out a couple of points there, but I hope that I was able to help a bit. So I have talked about the pros and cons of the AMM for us who actually hold XRP. Now, unless there is a problem in the AMM, it is supposed to be impossible for a particular invariant to be broken. By the, can't say STs, of that invariant, it is not supposed to be possible to lose. When you provide liquidity to an AMM, depositing it into its pools, you get liquidity tokens that are specific to the AMM whose pools you contributed to. So it should be impossible to actually lose value. You can turn volatility into a positive. You can get some yield by providing people who are okay with paying a spread, and you don't lose as much if the value of one of the underlying assets drops because you sell all of the way down, and so hold less of the dropping asset at its bottom. And these are almost exactly the exact opposite of this. So I don't think that these are too much of a concern, in my opinion, at this time. But there is a potential for some people to not want to actually participate in this. But I think we will see. I think we will find that once it's actually up, things will become a lot more clear and understood. So here is an example of what an AMM might actually look like. And this is from Anados, and I believe that is from this guy here, who I refer to a lot. But that is what it could actually look like. And this is a platform that is being created to actually operate as an AMM. And then wait until they find that you will not even have to have a crypto wallet to connect to our apps to get access to the XRPL AMM and all XRPL features. Mass adoption is coming. And that is, in my mind, what is holding crypto back from more immediate implementation, because it's a lot harder to transact in crypto than it is to just transfer cash from one bank account to another account at this point in time. So I would imagine that it would work by connecting to your bank account or card, and you just put fiat in, which gets converted into XRP, and then it goes into the AMM there. I'm not 100% sure, but I would think that that might be kind of how that actually works. So what are the upsides to an LP over regular exchanges and OTC options? Will we see true AMM utility once trade volume is in and we don't have enough supply? But until then, AMM share widespread availability of XRP. So the whole point is that you can essentially operate as your own bank here, because you are providing capital into an LP, and you are earning rewards off of that. And it is it's got 24/7 access, because it is not a traditional financial institutions, and you get the rewards as well. So if you provide into these LPs, then you earn a portion of all of those trading fees in that pool. And there are more predictable fees as well. So here is the onxrp.com site that runs through a lot on the ins and outs of the AMM proposal. So I won't run through this, but it is online if you want to learn more about that.